You know, it really wasn't that long ago that regulators wouldn't touch digital assets with a 10-foot pole. I mean, it was the absolute wild west of finance. Way too risky, totally unregulated for the mainstream. So the big question is, how on earth did they end up as a core product firmly planted on Wall Street? Well, today, we're going to trace that incredible journey.
All right, to really get a sense of how far we've come, we've got to jump in the time machine and go back to 2018. And this quote, it just perfectly captures the mood back then. You've got the SEC, right? The highest financial regulator in the US, basically putting up this giant hard stop sign. And their main worries, things like market manipulation and, a total lack of investor protection. It really felt like the door to mainstream finance was just slammed shut. But that was the official line back in 2018. And you can probably guess, that hard stop wasn't the end of the story. Oh, not by a long shot. And that right there brings us to the big question we're tackling in this explainer. How did we go from a flat-out no from regulators to a full-on embrace by the financial establishment? It's a really fascinating story of chaos, a little bit of innovation, and a massive, massive regulatory U-turn. Okay, so to really answer that, we've got to get back into that 2018 mindset. It was this crazy time of incredible hype, for sure. But underneath all that noise was just this deep, deep well of uncertainty and, a ton of official skepticism. And this skepticism, well, it was coming from the very top. We're talking about the head of the Federal Reserve. He wasn't just being cautious, he was out there openly questioning the basic benefits and safety of the whole asset class. And look, when the Fed talks, Wall Street definitely listens. And the message they were hearing? Yeah, it was not good. Meanwhile, over in Washington, the story they were telling was even more stark. I mean, you had congressional hearings focusing almost entirely on the dark side of crypto, tying it to crime, and really painting this picture of a dangerous, shadowy world that was totally unfit for regular investors. And here's what's really wild. For all the hype about it being the future of money, the actual data was telling a completely different story. Its use for, actually buying stuff, it was going down. So you have this bizarre paradox. Speculation was through the roof, but its real-world usefulness was actually shrinking. And this quote right here from Fed Chairman Jerome Powell, it just perfectly sums up how the entire establishment saw things back then. Digital assets, they weren't a currency. They weren't a serious investment. Nope. They were just vehicles for speculation. Basically, a giant digital casino. So, okay, this was the fundamental problem, right? You've got this super volatile, super exciting new asset class, but it's completely disconnected from the regular, regulated financial system. So for the average person, someone with a normal brokerage account, getting involved was almost impossible without diving into this really complex and risky new world. Clearly, a bridge was needed. So how do you connect these two completely different worlds, the chaotic crypto space and the buttoned-up world of regulated finance? Well, it was going to take a new idea. And the answer, as it turns out, came from a financial tool that was actually pretty familiar, the exchange-traded product. Now, if you're not familiar with these, an ETP, or its more famous cousin, the ETF, is basically just a wrapper. Think of it like this. It takes an asset, in our case, something like Bitcoin, and it wraps it up so it looks and acts like a simple stock, one that you can just buy and sell on the New York Stock Exchange or the NASDAQ, no problem. That's it. That's the bridge. And this simple process, it completely solves the main problem for everyday investors. You have a big institutional-grade manager who handles all the complicated stuff, buying the crypto, storing it securely. Then they just issue shares that you can buy in your retirement account or your brokerage account just as easily as buying a share of Apple or Microsoft. All those scary technical hurdles and security risks for you, the individual, poof, gone. Okay, let's hit the fast forward button and jump to 2025. That bridge we were talking about, it hasn't just been built, it has totally reshaped the entire financial landscape. Suddenly, the Wild West is starting to look a whole lot more like Wall Street. And the impact? Honestly, it was staggering. By late 2025, a single firm that specialized in these new products was managing $35 billion in assets. Let that sink in. This was not some tiny niche market anymore. This was a massive flood of capital, and it signaled one thing loud and clear: deep institutional trust. And all that capital, it turned the companies that built these bridges into absolute market leaders. They became the #1 platforms for investing in pretty much everything, from Bitcoin and Ethereum all the way to the whole universe of alternative tokens. They were completely dominating the US market. So the big question is, how did the regulators finally get on board? Well, this timeline really shows the dramatic shift. After those first roadblocks, the massive company collapses in 2022 and 23 were actually the turning point. It's kind of ironic, right? They highlighted the huge dangers of an unregulated market, which then put massive pressure on them to create a clear, regulated system to protect people. And that's when the pendulum just swung hard in the other direction, away from no and towards real constructive action. And this chart just puts it all in perspective, doesn't it? In just a handful of years, we went from total regulatory uncertainty to having a clear path forward, from fears of manipulation to huge institutional adoption, from high-risk, hard-to-get access to simple, regulated ETFs, and from being seen as just a speculative toy to being considered a real tool for macroeconomic diversification. I mean, it is a complete and total transformation. All right, so after this absolutely massive shift, you might be asking, okay, why does any of this matter to me? What are the real-world implications for investors and, for your financial future? So what are the key things you should take away from all this? Well, first up is accessibility. This asset class isn't hiding on the fringes anymore. You can get it right where you already manage your money. Second, there's regulation. Now, look, it's not risk-free, but the new rules are there to give you the kind of investor protection you'd expect from any other market. Third, mainstream integration. I mean, when a top digital asset manager goes for an IPO, that is the ultimate sign that it's been accepted by the establishment. And finally, and this one is huge for a lot of people, it's now part of the retirement conversation. We're talking about government directives looking to make these assets available in 401k plans. That's a real game changer. So there you have it. The Wild West has been tamed, it's been packaged up, and it's being sold on Wall Street. The frontier that was once feared has now become just another regulated part of the financial system. Which, of course, leaves us with a really interesting question. What happens next? What happens when the pioneers are joined by the bankers? Now that this frontier has been settled, where does it go from here?